What's good, family? It's your man Harrison back again with another video. In today's video, I'm going to be giving you guys my gold analysis. Alright guys, so before we get into the video, definitely subscribe to the channel. Let's get this channel to 50k subs. And family, don't forget to smash that thumbs up button. Let's try and keep a 2-to-1 views to like ratio on this video. But anyway guys, let's get straight into the video. Alright guys, so this is gold. As you can see, there's so much that's happened with gold. You know, we got tons of liquidity up here. Okay, we've also got liquidity. There was liquidity down here, but they ran it out as well. This is what I wanted to show you guys, right? So right now I'm on a 16-hour time frame. I know you guys have never use this time frame. If you have used the 16-hour time frame before, drop it down in the comments. I want to know who's been really investigating in my community. So guys, 16-hour time frame, and then what do we see? First of all, we see that there's liquidity up here. When price came up here once, you know, we know there was liquidity up here already. People would have put their stop losses above here, and then they would have sold it down. We know price created equal lows, or in this case triple lows, right? And so you know what's beneath triple lows. You know there's people's stop losses in this whole area down here. And so what happens is when price breaks down, they would break down to the point where they take out every single person's stop loss and then turn around, which is what they did. They pushed up, you know, so retail traders get excited, triple bottom, pushed up. They got a little 1-2, and then it just dropped, took out all their stop losses, right? Then check this out, guys. So you can't forget these things. You can't miss these things out, right? What did price do? When price was dropping down, what did it do? It produced a last down close candle before the up move. So once again, you know, retail traders would have been sucked to go shorts, okay, and then they would have been stopped out. You have to be able to mark up and identify these things. So this is what happens. Then price trades up, okay, price trades up. It's already taking liquidity, all of this liquidity already, and then obviously it's producing equal lows and equal highs on the way up as well, and it's running them out. But when it gets up here, it does not run out the high. So when it does not run out the high and it starts to turn back around, all they've done is they've generated more liquidity in this whole area down here. Why? Because now traders, where do you think they're going to put their stop loss? They're going to put their stop loss above this high, okay, because they're trained to put their stop loss above a previous high. So once again, their stop loss is going to be in this area. So what's happening? There's a pool of liquidity up here, okay, and so this range, right, so I know I just want it to go to 2000, okay, I do want it to go to 2000. So this range alone is roughly about a 350 pip stop loss. So what's going to happen? It should run them all out. Every single one of them should run them out, because I don't know who has a 350 pip stop loss, and then it will probably reverse. So what's happening now? So yes, it produced a lower high. Gold were very bullish, okay, long term, weekly and monthly time frames, we are very bullish. So check this out. So now when price is trading back down, what is it doing? So look at this, it's just taking the liquidity little by little. So it trades down lower, okay, it trades down low, takes out all the liquidity beneath this low. Yeah, all of this liquidity. As you can see, it dropped beneath this the wick here. So it took out all that liquidity, and then it traded low again. It even created equal lows, but it traded low again, took out this liquidity resting beneath here. Then it traded lower again, okay, to take out this liquidity resting beneath here. And in doing so, they tapped into the drawdown candlestick where they mitigated their position, and now they're pushing higher. So in this little move here, there's lots of consolidation, okay. So when they drop price down, they ran out the bottom side, but where's the drawn price? The drawn price is to the upside. Why? There's equal highs over here, which will act as a magnet to price, and there's also lots of liquidity up here. So if gold has taken the liquidity on the bottom side, where is the money? The money is to the top side. So, and it's not just here, the money is also here. As you can see, this high, yeah, there's liquidity above this high right now. So there's money above this high, there's people's stop losses above this high. So what would happen is after probably a pullback, okay, then it will take off again, aim for these highs, and then continue to build higher until when it stakes out all this liquidity. So you can either do, you know, one of two things, right? So you can either be jumping in with buys, okay, and then letting it pull back and then jumping in with more buys. For some people, they enjoy doing that. Or you can swing trade. And this move here, let's just say if it pulls back down to this level down here, okay, just to get to 2000 to run out all the liquidity, we're talking about 1850 pips. That is a lot of pips. It's a lot of pips, just letting you know. That is a lot of pips. This is what we're talking about now. That's the 1,800 pips. And even if you didn't want to take it there, even if you wanted to just take it to the equal highs, even let's just say to the equal highs, that's still 600 pips. 0.1, for example, you're at least making a couple $100, right? So you don't have to take it all the way up here. So this is just my opinion. This is not set in stone. This is not solid, okay? Obviously, you guys know that trading is risky, okay? So you trade at your own risk. If you want to take any kind of trade, you have to take it on your own accord. You make that decision. That's not me. This is just my opinion. Could be chatting rubbish for all I know. This is how I'm analyzing gold. This is my opinion on gold. Once it gets to 2,000, okay, obviously we'll get a little pullback, and then I want it to come and tackle these highs over here. So even just to get up to here, let's just say you did decide to swing trade this thing, okay, from here to the high. We're talking about 2,600 pips. So, and this will obviously take some time, just let you know. To get up to this level will probably take another month or two, right? And so it will be the biggest swing trade, you know, you've probably ever done. So yeah, guys, that's my analysis on gold. It snatched the liquidity already. It's traded down into that last down close candle where the institutions were in drawdown, right? It's mitigated that position now. Now I want it to start pushing higher, okay, pushing higher. So if it does get back above this level down here, this will be a good sign. So I want it to push above the level, pull back, you know, and then continue just, you know, just like a normal trend. So guys, that was my analysis on gold. Let me know what you think in the comments, right? I'm not bothered about this equal lows. I'm not bothered about these equal lows unless price starts breaking lower than here. Price breaks beneath these lows, then, you know, this becomes an area of interest. But for now, look, I'm bullish on gold. And so yeah, pullbacks, I'll be, you know, looking to go long. Alright guys, so it's a couple of days later now. So much things have happened with gold right now. So I just wanted to quickly break that down. I break down where I got my entry to. So this is when it pushed down into that 16-hour last down close candle. It then rallied up, okay, and now what's happened is it's pulling back, or it's pulled back. I got in a couple entries down here. You know, I was playing off of this institutional candle right here, okay? So when price came into that area, I've got in some buys. Altogether, I had about 6 positions in total. So 4 of them got stopped out in profit and 2 of them got stopped out on a loss, but it is what it is. You keep it moving. And so now what's happened is price is now retraced, and this is like a really big retracement, right? This is a huge retracement. Gold is probably retraced back further than 88% right now. So I know a lot of retail traders would have been looking to get in at the 61, which is roughly about this level down here. I also got in at this level as well, but you know, I realized it was the 61 after I got in, and I was already in and in profit. So I was like, I'm holding, but it's all good. So right now what's happened is gold is now, and you know what fam, this is what I done found out. Sometimes they can be really cheeky, right? So you know what, I had no idea that there was some equal lows down here. For some reason this had missed me. You know, I didn't even know there was equal lows down here, but I did know that this was going to be the area that I was looking to get my buy in, right? So when I identified that there was equal lows here, obviously they have to run those equal lows. And like I say in every single video, whenever you get equal lows, they're normally telling you a story, okay? They are telling you a story. So it just literally means there's something beneath here that I'm reaching for before I continue my move. And so they reach for this level right down here, okay? This level right down here. And funny enough, it is, you know, let's just mark this up real quick. So what I've done is I've marked up 50% of the body of this institutional candle, and it lines up exactly down here. So this is why they came to tap this to the very T. So if I zoom on all the way out, as you can see, they've come to tap it to the T, and now they're starting to struggle down here. So this is where I got my entry. We're going to see how this goes. This could be the move to 2000. It could be the move to 1965. It can even be the move just to up here. But once again, I'm going to repeat this. This is just my opinion, right? This is just my opinion. Price could continue to drop. I could be chatting rubbish for all I care right now. So trading is risky. If you decide to trade, you trade at your own risk, okay? No one's telling you to trade or to buy or sell anything, right? So if you are going to do it, I recommend you do it in your demo account. There is no one forcing you to do anything. Trading comes with risk. If you just look at this as well, guys, there's so much liquidity in this whole move where price was just consolidating. In this whole move, you can see that there's so many different areas of liquidity, right? So there's relative equal highs over there. There's another set of relative equal highs over here. There's liquidity above this high, and there's also liquidity above this high. So, you know, there's tons of pips to be able to catch. So just from this level alone, just to get back up here, we are talking about 360 pips. That's some people's monthly goal just to get up to here, family. And you know that's nothing for gold. Alright guys, so here is my mentorship group. So right here at 217, I dropped the chart for the team, and I was letting the team know that gold is pulling back, and it's a very deep pullback, and it's looking to run out these equal lows. So I had just identified the equal lows, so them sneaky equal lows. So I thought, look, I'm going to let the team know, look, they're running out liquidity, and after they run out liquidity, then they should push up, right? So guys, like I said, if you want that mentorship, right, you want to learn how to trade institutionally, then hit me up on Instagram at @harrisonuwah. So anyway guys, I just wanted to drop this last part of the video where I'm showing you where I'm entering this trade from. Thank you guys for watching the video. Have a blessed day. Peace.